according to my calculations, you're looking at the true fundamental value of an ounce of gold at somewhere between $33,000 and $40,000 an ounce. So at 3,400, spot gold is a ridiculous bargain. But that also then means that silver's fundamental value at this moment is somewhere between 1,300 and 2,000. And remember, the more of this that they do, the higher those numbers go.
Not only gold bugs, but also silver investors have every reason to be very optimistic about the future these days. The best time of the year, the winter season, is just around the corner, and in the charts, the correction of the past few months can be interpreted as a rectangle that could form the basis for the next major upward movement. A critical breakout in precious metals is imminent. Gold is forging a pattern of higher lows, but silver is the most exciting play. A push above $50 will complete a rare double cup formation, a long-term pattern that could send silver substantially higher. Seasoned financial analyst Lynette Zang reminds us that even with today's prices, silver is tremendously undervalued, and its inflation-adjusted 1980 high is nearly $200. Given expected interest rate cuts, a weaker US dollar, increasing inflows into ETFs, and recovered Indian imports, Morgan Stanley analysts see further potential for both gold and silver. For the yellow metal, there is still 10% further upside potential, while silver has almost met its forecast, but shows potential to exceed it, they said. Referencing LBMA data, Lynette highlights that physical silver stocks have been drawn down significantly, unlike gold, which has been partially replenished. This depletion reflects silver's unique role as both an industrial and monetary metal. She further points to the SLV ETF, which had to change its prospectus because it could no longer secure the physical. The London Bullion Market Association reportedly holds silver reserves of approximately 155 million ounces, described as a 140-year low. Yet daily trading volume officially stands at 190 million ounces, exceeding the entire physical float. Some industry experts suggest actual trading volumes may be as high as 1.9 billion ounces daily when accounting for unreported over-the-counter transactions. Before we dive into Lynette Zang's sharp insights from his latest interview, make sure to hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the market. Let's get into it.
I see that both on the spot market for both gold and silver, them coming to a critical point. With gold, what I'm seeing is a series of higher and higher lows as the top end have been kind of bouncing against it about 3 or 4 times. So I expect a breakout within the next reasonable period of time, short period of time. With silver, it's probably even a little bit more exciting because we are now really coming to that $40 and the next bump is at that 50. And when it goes above that 50, what you'll see on the spot silver chart, especially if you zoom all the way out, is the conclusion of a double cup formation, which is a cup formation is a major accumulation pattern. A double cup is, I imagine that to be quite powerful. So, I think that could happen maybe by the end of this year or into the first quarter, but either way, on both the spot markets, I see them extremely strong. And I think that a lot of that has to do with the level of chaos, the level of inflation, the level of geopolitical issues, many issues that are swirling around right now, central bank independence, all sorts of stuff. I definitely do think that triple digit price. Now, one thing that you mentioned about 80s with the Hunt brothers accumulating silver because they wanted to leave the US and form their own little country in Texas. However, the importance of that should not be just trivialized or ignored because what we were really dealing with was an overt manipulation by our government of the silver markets. And everybody was warned. And I have to say, Jesse, I have often wondered when these things that happened, and they seem outrageous to me, like taking the gold away from the population, like taking the silver away from the population, like a sitting president admitting that they're going to manipulate the markets. And I used to wonder how they could get away with that, why people didn't rise up and say, no, you can't do that. That's crazy. Well, I think we're living through that right now. And I'm seeing it happen. I think there's a lot of blindness that's going on. So I do actually consider the $50 mark nominal, to your point, to a very valid point, because these markets are manipulated. And so if anybody really expects there to be any level of good price discovery with spot gold or spot silver, and I always make sure I say spot because that is just a contract. And when you're talking about silver, there's a chart from the LBMA that they came up. And of course, we know that there was a huge rush of physical coming into America at the beginning of this year. And you can see the stores in the LBMA dropping in gold, dropping and then rising again and coming back pretty close to the levels that they had before whatever came out of the LBMA. I'm actually more interested in what came out of the BOE. But let's just stay with the LBMA for a minute, because the same kind of issue with the physical metal being shipped over happened with silver as well. But their stores are significantly lower than they were before that physical push into the US. So what does that tell you? It tells you that silver gets used up in industry. And just like the SLV silver ETF that is supposed to be a basket of silver, they couldn't put the basket together. So back in, I don't remember whether it was 21 or 20, but they changed the prospectus. SLV changed its prospectus so that they didn't actually have to pull a basket of silver in, but rather all they had to do, which is what they were designed to do anyway, which is imitate the spot silver market. I'm pretty sure that Saudi Arabia would be considered an administrator, which means that they would, you and I can't do it, but they would have the ability to take possession of the underlying silver. So I think that that is a manipulation to make that happen, because that can happen even more invisibly than what we were just talking about. And since silver is used across every single sector of the global economy, in solar, in medicine, etc., and gold is as well. Both of them are, but silver more so straddles that world. I think that this could also be a maneuver to ensure that they get their hands on the physical silver. At the end of the day, the holders of SLV won't. I mean, the normal holders of SLV wouldn't, but JP Morgan would and Saudi Arabia would. So I think it's a backdoor way to do it and have control of it. But the real problem is it would have to be done strategically. Like I'd be curious to see how much of a percentage of the holdings that they already have in silver that would actually represent. Because if they did take out the physical at the same time that SLV itself, that trust, is selling off bits of silver on a daily basis to pay the rest of the fees, the repercussions for the public would be huge. Those that think that they actually own silver with an SLV, they don't. They just own shares in a trust. You know, as long as derivatives exist, right? So silver futures where they can create as much silver as possible. But then again, remember, we're coming to conclusion. And I do consider what happened in 1980 at that $50 mark. I consider this a massive double cup because it did come up to breach that level. And so when it goes above that 50, you know, would 3 or even 4 digits in the silver nominal price, the price that we see, would that be outrageous? No, it's worth at a minimum $1,300 an ounce. And that's just based on the 20th to 1, that little $1 gold coin and a silver dollar. So that's a 20 to 1 ratio right there. So according to my calculations, you're looking at the true fundamental value of an ounce of gold at somewhere between $33,000 and $40,000 an ounce. So at $3,400, spot gold is a ridiculous bargain. But that also then means that silver's fundamental value at this moment is somewhere between $1,300 and 2000. And remember, the more of this that they do, the higher those numbers go, because this is fiat money, government debt-based money. But gold and silver are sound money. Sound money is money that governments and central banks cannot inflate away. They can manipulate what you see through the use of garbage derivatives, but they cannot inflate it away.
Analysts and investors have been discussing de-dollarization for years, referring to the gradual shift by governments, companies, and investors away from using the US dollar as the world's default trading and reserve currency. In 2025, de-dollarization is gaining speed. According to Lynette Zang, since 1913, central banks have replaced real money with paper, stripping us of our financial power. Central banks profit from printing money, but even the Federal Reserve is now running losses, signaling the dollar is nearing its end. Lynette believes that if just 3% of people shift into gold and silver, it could spark real change, much like the American Revolution. Economic data releases create regular volatility in gold prices. Employment reports, inflation readings, and manufacturing indexes all provide insight into future monetary policy decisions, with gold markets often reacting strongly to unexpected results. Gold has stabilized after another rally amid concerns over the independence of the Federal Reserve and inflation risks in the U.S. At the same time, Goldman Sachs Group Incorporated warns that the price of gold could rise to nearly $5,000 per ounce if the independence of the Federal Reserve is undermined and investors move even a small portion of their assets from treasuries into bullion. Let's get back to the interview.
You getting to safety, and safety is having surety in everything that you need, so that if the government says jump, you don't have to say how high because you don't need them. Right? You have surety in your food and your water and all your necessities, and you're surrounded by community. And on a global basis, we've got to, all you got to do, there's 8.4 billion people in this world. And where one person could not make a difference, if 3% of us come together, I think we've got a shot. And if we don't do it, what's going to happen to our children? I'm not really worried about myself personally because of all of the choices that I've made right along the way. I'm not even really worried about my children because of those choices, but I am worried about everybody else's children because they want to take us back to pure feudal times and they want absolute control. And we aren't in a democracy. We haven't been in a democracy in a long time, nor is this really a capitalist circumstance. This is fascism. The merger of corporation and government is fascism. That happened back in 1913 and 1914 when our government started on this path and had, believe it or not, but I have the evidence for it, which you can have if you want to. But what did the government do? What did our government do and our central bank do? They converted corporate debt into Federal Reserve notes. And then they had those Federal Reserve notes. I mean, it's genius. It's evil genius, but it's absolute genius. I mean, look at how they did it. And I show you because they're doing the same thing now. So, if you recognize it, you can make a difference. But here you go. Okay, this was money. $20 gold piece, 1 ounce of, roughly 1 ounce of gold. Okay. This was our money, but oh my goodness, how heavy and inconvenience it is to carry it around. So let's just do it with this, a $20 gold certificate. Hey, it has that little gold thing there, and you can walk into the bank with this and walk out with this. And that created restrictions around what governments could do. But at the same time, in 1914, they converted a whole boatload, like 10 times the amount of gold we held in deep storage, to this Federal Reserve note. Can you see how close this resembles that? And they allowed them to run alongside of each other for 20 years. All three of them absolutely interchangeable. So when these two things went away, we still had this, and people went, well, nothing's changed. When in reality, we gave up our power because we no longer had a mechanism to check the government and the central banks. They did the same darn thing in 1965 because up until 1965, our money was still silver. It was silver right here. You can see it on the rim. And then they came out with new quarters that look almost identical, except on the rim, you can see a copper color. But hey, they made sure that they fit all the vending machines and nobody would notice. And then to our earlier discussion on what happened with the manipulation of silver. And so what do we have is garbage, right? And that's what happens. As the money devalues, the old money, right? The gold money, well, they printed $2.4 for every 20th of an ounce that they had in circulation. So it became more expensive to mint a $20 gold coin because they devalued it so much. So they had to get rid of it and also our control. Same thing with silver. And now the same thing is happening with pennies. Because pennies used to be 85% before 1982. They were, 95% copper. Then they went down to 15% copper. Now it costs 3.9 cents to make 1 penny. The penny is going away. But the other thing that I really want to point out, because I don't hear anybody talk about this, and I think this is incredible. Does anybody ever ask how the central banks make the money that they need to stay alive? Seigniorage. So it costs something like 9.4 or 9.7 cents to make this $100 bill. Now you and I have to work $100 worth to make this bill, but the difference between the cost to create it and what they sell it for, which is 100, is all theirs. And then if they have anything left at the end of the year, that goes to the Treasury. We are now in the 4th year of the Federal Reserve losing money. And you have to wonder, how is that happening with all of the money that they created and all of that seigniorage? How are they losing money? You think that doesn't matter? No, they just don't want you to look at that. But that too, there are all of these indications that we are at the end of this currency's life cycle. Let's take back our control and have a say in the new monetary system. I've never seen an opportunity in my career as good as this opportunity right now. If we can get 3% of the global population to convert into gold and silver, not all of it, just some of it, that could be enough. That's what it took for the Revolutionary War, 3% of the population. So I'm thinking 3% this time.
Financial analysts generally maintain constructive views on gold's near-term prospects. While specific price targets vary widely, the consensus acknowledges supportive fundamental factors, including central bank buying and persistent geopolitical tensions. After gold had set one all-time high after another in spring, and the silver price also advanced from one multi-year high to the next, things have quieted down a bit for the two most well-known precious metals over the past 3 months. As de-dollarization accelerates and trust in fiat money erodes, will investors recognize the urgency to shift into gold and silver before the next major breakout? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.